Why do the wealthy continue to pour money into hedge funds, despite their reputation as terrible investments? A paradox, isn't it? To unravel this enigma, we first need to understand what a hedge fund is. Think of it like an exclusive club where the wealthy and accredited investors pool their resources to make high-risk, high-reward bets on the market. Run by skilled, or at least purportedly skilled, hedge fund managers, these funds aim to make money irrespective of the market conditions. Seemingly a lucrative proposition, right? However, here's the twist in the tale. These funds are notorious for their high fees. Traditionally, a hedge fund charges a 2% management fee and takes a 20% cut of any profits earned. This is often referred to as the 2 and 20 model. That's a steep price to pay, especially when you consider that the average hedge fund has underperformed compared to broader market indices over the past decade. In fact, according to a report by the Financial Times, over the last 10 years, hedge funds have returned an average of just 3.5% per year, compared to the S&P 500's annual return of nearly 7%. That's nearly half the returns for more than twice the cost. So it's clear that hedge funds, on average, are not stellar performers. Yet, we see a strange phenomenon where the rich continue to invest in them. It's like willingly boarding a sinking ship. You might be thinking, surely, the wealthy, with all their financial advisors and market insights, can't be making such a seemingly irrational decision. There must be something we're missing here, something that makes these underperforming high-fee funds attractive to the affluent. So, if hedge funds are such terrible investments, what's the catch? Why do rich people persist? Hedge funds, despite their flaws, hold an undeniable allure for the rich. But why? One of the primary reasons wealthy investors are drawn to hedge funds is the promise of high returns. Yes, the potential for a big payday is a major draw. The idea of multiplying one's wealth significantly is hard to resist, especially for those who already have money to spare. But that's not the only thing. There's also the appeal of exclusivity. Hedge funds are often considered the playground of the wealthy, the elite. There's a certain prestige that comes with investing in these funds. You're not just any investor. You are part of a select group, the crème de la crème. This exclusivity can be enticing, adding a layer of allure to hedge funds that other investment vehicles simply cannot match. Additionally, hedge funds offer the potential for diversification and risk management. They use a variety of strategies and invest in a wide range of assets, from stocks and bonds to commodities and derivatives. This diversity can help spread risk, potentially protecting investors from substantial losses. And let's be honest, when you have a significant amount of money at stake, risk management becomes paramount. But it's not all about the money. Hedge funds also offer a certain degree of control. Investors in these funds can often have a say in the fund's strategy, its investments, even its management. This level of involvement can be appealing to those who like to have a hand in their investments, who want more than just to hand over their money and hope for the best. So it's clear that hedge funds are not simply about returns. They offer something more, something that the wealthy find irresistible. The promise of high returns, the allure of exclusivity, the potential for diversification and risk management, and the prospect of control all combine to make hedge funds an attractive proposition for the rich, despite their potential drawbacks. But there's more to this paradox than meets the eye. There's a deeper reason why the wealthy are drawn to hedge funds. You see, the psychology of wealthy investors is a fascinating study. Many of them have an appetite for risk that far outstrips that of the average investor. The prospect of higher returns is a siren song that they find hard to resist, even in the face of potential losses. And let's not forget, these individuals often have the financial cushion to withstand market downturns that could devastate less affluent investors. But there's another dimension to this as well. For many of the wealthy, investing in hedge funds is about more than just making money. It's about prestige. It's about being part of an exclusive club that's out of reach for the average person. Hedge funds are often seen as the playground of the rich, where big bets are made and fortunes are won and lost. This exclusivity, this feeling of being part of a select group, is a powerful draw. It's a status symbol, much like a luxury car or a mansion in a posh neighborhood. And then there's the potential benefits that hedge funds can offer. Yes, they can be risky. Yes, they can underperform, but they can also provide a level of diversification that's hard to achieve with traditional investments. They can act as a hedge against market downturns, offering a measure of protection that can be very appealing. So, When you put all these factors together, the appetite for risk, the allure of prestige, the potential benefits of hedge funds, you start to see why the wealthy continue to invest in them. It's not just about the potential for high returns. It's about the thrill of the game, the allure of exclusivity, the desire to protect and grow their wealth in unique and potentially lucrative ways. The hedge fund paradox, then, is not so paradoxical after all. It's a reflection of the mindset and values of the wealthy. So, what's the takeaway from all this? Well, despite the common consensus that hedge funds may not be the best investment, they do hold a certain appeal for the wealthy. They offer a promise of potentially high returns and act as a buffer against market risks. This allure of uncorrelated returns and the prestige that comes with being an accredited investor in a hedge fund can be enticing. However, it's imperative to remember that hedge funds come with their fair share of costs and risks. They are not for everyone, and they certainly aren't a surefire way to wealth. As an investor, it's essential to critically analyze your own financial goals and risk tolerance before diving into the world of hedge funds. Whether you're a billionaire or just starting out, it's crucial to understand not just the potential returns of an investment, but also its risks and costs. And remember, no investment is a sure thing, not even hedge funds. Thanks for watching. Please remember to like, subscribe, and share so you see our future videos pop up on your newsfeed. Stay safe out there, guys.